The world of cryptocurrency is a wild west of speculation and volatility, yet it holds an undeniable allure. For many, the biggest draw is the chance to strike it rich. Smaller cryptocurrencies, often called altcoins, are particularly tempting. They offer the possibility of massive returns. This is the dream that drives countless investors. These investors are often drawn to the low entry price of these digital assets. They imagine turning a small investment into a life-changing fortune. However, this potential for reward comes with significant risk. As the saying goes, what goes up must come down. The story of Auction Token in early 2025 perfectly illustrates this dynamic. It's a cautionary tale about the dangers of speculative bubbles. It's a reminder that the cryptocurrency market is still in its infancy. It's a space where fortunes can be made and lost in the blink of an eye. Auction is the native token of Bounce Finance. Bounce Finance is a decentralized auction protocol built on the Ethereum blockchain. It allows users to create and participate in auctions for a variety of digital assets. These assets include cryptocurrencies, NFTs, and more. For much of its existence, auction had been a relatively obscure token. It traded at low prices. Only a small dedicated community paid attention to it. Then in early 2025, something changed. The token's price began to climb. This rise was initially slow and steady. It attracted little attention from the wider crypto market, but this would soon change. By mid-March, auction's price had begun a truly remarkable ascent. It was a surge fueled by a potent cocktail of speculation, hype, and market manipulation. This period would come to define auction's volatile journey. It serves as an example of both the immense profit potential and the inherent dangers of the cryptocurrency market. The rapid price appreciation of auction in March 2025 was driven by several factors. Two, however, stand out as particularly significant. These were the fear of missing out, FOMO, among retail investors, and the manipulative activities of large holders known as whales. As auction's price began its upward trajectory, it caught the attention of more and more investors. Social media platforms and online forums became abuzz with talk of the token's potential. Stories of early investors reaping massive profits spread like wildfire. This created a powerful sense of FOMO among those who had yet to invest. They didn't want to miss out on what appeared to be a surefire opportunity to make quick money. This fear drove many to buy auction at increasingly higher prices. This further fueled the token's upward spiral. Simultaneously, on-chain data revealed that large holders, or whales, were manipulating the market. They were strategically timing their transactions to maximize their profits at the expense of smaller investors. These whales were buying large quantities of auction. This artificially inflated the price and created the illusion of organic growth. They would then sell off their holdings at inflated prices. This triggered a cascade of sell-offs from panicked smaller investors who had bought in at the top. This cycle of pump and dump is a common occurrence in the cryptocurrency market. It highlights the outsized influence that whales can wield. It also highlights the vulnerability of retail investors who often lack the knowledge and resources to navigate these manipulated markets. Education and awareness are crucial for retail investors to protect themselves. Staying informed about market trends and understanding the tactics used by whales can help mitigate risks. By fostering a community of informed investors, the market can become a more equitable space for everyone. Section 4. Riding the Wave Auction's Dizzying Heights. The peak of auction's meteoric rise came in mid-March 2025, a period that will be remembered for its unprecedented market activity. The token hit an all-time high of $67.55, a milestone that stunned both investors and market analysts alike. This represented a staggering 712% increase from its lowest point earlier in the year, a feat that seemed almost impossible. This dramatic surge attracted widespread media attention, with headlines capturing the frenzy and excitement surrounding auction. It cemented auction's status as one of the hottest stories in the cryptocurrency market, drawing in both seasoned investors and curious newcomers. Trading volume for auction exploded during this period, reaching levels that were previously unimaginable. On some exchanges, it increased by over 400%, a clear indication of the token's growing popularity and demand. This frenzy was reflected in the surge in active addresses interacting with the auction blockchain, showcasing the token's widespread adoption. the number skyrocketed from under 400 to over 1,500, a testament to the growing interest and participation. This indicated a massive influx of new investors, many of whom were likely driven by FOMO and enticed by the promise of quick riches. This parabolic price action was accompanied by a significant increase in whale activity, with large transactions becoming a common sight. Transactions exceeding $100,000 and even $1 million became increasingly common, further driving the token's value. This further fueled the upward price pressure, creating a self-reinforcing cycle of growth and speculation. It created an environment where even seasoned traders struggled to make sense of the token's true value, adding to the market's volatility and unpredictability. Section 5. The crash, a sudden fall from grace. The euphoria surrounding auction was short-lived, as the initial excitement quickly turned into anxiety. On March 21st, the price began to decline, sending ripples of concern through the market. At first, this decline was gradual, almost imperceptible to the casual observer. It was perhaps dismissed by many as a natural correction after such a significant rally, a mere blip on the radar. However, the situation deteriorated rapidly, catching many off guard. On March 22nd, a large whale withdrew a significant portion of auction's total supply from Binance, a popular cryptocurrency exchange, causing panic. This move, combined with the already overheated market conditions, triggered a massive sell-off. The price plummeted dramatically. By March 24th, auction had crashed to $11.86, a shocking turn of events. This represented a staggering 82% drop from its all-time high just days earlier, leaving many in disbelief. Countless investors who had bought in near the top were left holding the bag. They faced significant losses with little hope of recovery. The crash served as a stark reminder of the extreme volatility that characterizes the